Hi everybody and welcome to the midweek market update from Smack the Markets for the 4th of December. Now so far this week we've had, quite a turnaround in a number of those pretty much sort of well-established trends in the markets that we've had. This has mainly been brought on by some adverse sort of comments around the US and China trade negotiations and trade deal, also about the prospect of future sort of trade sort of sanctions with between the or trade tariffs, I should say, between the EU and the US as well. Those having sort of quite an impact on the markets and created quite a bit of volatility. And I don't think things are likely to get an awful lot better going into the second half of the week. We've got the major non-farm payroll news out on Friday, and that's always a high level news announcement that can create quite a bit of volatility in the markets. So let's take a look at how the markets have fared since Monday, and also some of the opportunities that we're looking at going into the second half of the week. Now, if we come and take a look at the Dow Jones here, this is the Dow Jones futures contract. The market here has retraced way beyond the sort of levels that we were looking at as potential support structures earlier in the week. Now, if you recall, back on Monday, the market was, we had this sort of level up here around the sort of 27.5 area, where this was the sort of tipping point here for the trend structure on the daily time frame. And we can see that the market's actually sort of plowed through that. It's got right down to 27 sort of 400, where we've got some more support structure. But below that, we've got that key 27,000 level at the moment. So again, the main drivers of this is mainly going to be around sort of fundamental news, big economic news, which is what sort of caused this drop in the first place. So at the moment, we've got some pretty good structure in the market and well-defined sort of structure levels. If we come down to the 4-hour time frame, here's our 27,400, here's our 27,000. There's a couple of other sort of minor levels that we can see here on the 4-hour time frame. But by and large, if the market can't hold 27,400, it's likely to resume this trend. It's likely to continue to move on and possibly looking for a target level down here towards that 27,000 price point. At the moment, there is obviously the possibility of a bit of a retracement, but this market here has got a long way to go to change any kind of trend structure that it's forming. Above price, we've got 27,700, which again is a sort of key resistance sort of area at the moment. So contained within this range of 100 pip range at the moment, between 27.4 and 27.5, our sort of plan on trading the Dow here is pretty much going to be sort of intraday trading between these sort of trading windows, depending which way this market sort of breaks out. As I say, our favor at the moment, things are looking rather weak for these markets. Now, if we come to the commodities, now silver, on Monday, we were looking for opportunities here on silver as the market sort of broke through the $17 level. We were looking, it was quite a different environment at the start of the week. We were looking at risk on, we're looking at bullish index markets. We were looking at money coming out of safe havens. That clearly has now sort of changed with the events that have happened so far this week. We've seen a rush to safe haven markets, and silver's one of those that has benefited from this. So clearly sort of bouncing off this $17 sort of dollar level. What is a little bit more reassuring here is that the market's kind of breaking out above this range that it's sort of had there on the daily time frame and these sort of lower time frames. So it's this sort of consolidation range. The market's breaking out of this to the long side now. So if the same theme continues of risk on, risk off approach, I should say, going into the second half of the week, then we may well see continued money flows into precious metals, and silver and gold are likely to benefit from that. Now, the silver market is our favorite one here out of the bunch because, again, it's sort of breaking through this sort of 17.30 area. Again, there's a sort of trading window up there towards that sort of 1760 and 1775. there's fairly sort of reasonable sized trading windows up there. The way we're looking at managing this is to wait for sort of breaks and pullbacks into these sort of areas. Things are looking a little bit sort of stretched at the moment for us, but some sort of pullback into value areas, if it coincided with this level, that would be sort of particularly nice. And again, looking at long opportunities here for the market to move back and fill those trading windows. Now, from a currency perspective, earlier in the week, we were looking at taking advantage, and we were taking advantage of these nice trends in the Kiwis. So Kiwi yen, Kiwi dollar had some extremely good moves. We've enjoyed this trend again over the sort of past couple of weeks. We had the retracement, and we're looking for the retracement back into sort of value areas. This is not sort of holding here on the sort of Kiwi yen and a lot of these Kiwi markets. You know, Kiwi dollar, for example, we've got that support level around sort of 65, but not looking particularly sort of reassuring at this moment in time. At the moment, again, there's quite a lot of weakness in the Kiwi. There's quite a lot of strength in the yen. So there's sort of strengths and weaknesses for sort of Kiwi yen, and a lot of these associated markets and trends are not in alignment at the moment. However, the longer term trends on these markets are clearly to the long side. And one here that I'm keeping an eye on really is that where the market may well sort of find support, where we may well sort of see a resumption of the longer term trend on these some of these higher timeframes. And my favorite one out of the bunch of Kiwis is the Kiwi Swiss. So if you come to the Kiwi Swissy on the daily time frame, we can see that there's quite a decent sort of level here around that sort of 664 level. You can sort of zoom out of this and you can see, you know, the level sort of coincides with previous sort of history going back quite some time. There's a very reasonable sized trading window above price, and we've already got a well-established trend already formed here on the daily time frame with good geometry as well. So again, looking to see if the market can actually sort of find support, if this is going to be a turning point around this structure area. Again, that could be sort of quite a nice area for long positions, again, taking advantage of the continuation of that long trend. But again, carefully looking to see whether the market does find support around here and whether these longer term trends will prevail. So those are the markets, some of the markets that we're keeping a close eye on in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.